Hi guys, hope you're well. Nick here, CEO of Masar Capital. So today I've just gone live across our couple of social channels to answer some frequently asked questions on the SLS Dubai Hotel and Residences investment. So the purpose of this is just to run through some frequently asked questions, inquiries, comments, concerns that a lot of investors ask during the explanatory process. So when I'm having calls or on email, etc. So I've got a list here on my screen of a few questions that are commonly asked, and I'm just going to reel through those to hopefully give people a good overview of what other people are thinking, what things are running through your head when you're making an investment decision, and hopefully clarify a few points for everyone. Hopefully my audio is okay. I appreciate it's very bright behind me, but this is in our office in Business Bay, so let's get started. So firstly, with regards to the summary, how does it work, etc. So what we're speaking about today is a fractional hotel investment, and that means shared ownership. So you can purchase a fraction of a hotel apartment, which is 25% of the apartment. So there's 4 fractions per apartment, and investors can purchase 1 and above. Now, this is a 5-star hotel, which is complete, operational, and has been open since April 2021. It's located in downtown Dubai and run by the SLS brand. We'll speak more about the companies behind it a bit later. So, it's ready, it's complete, it's operational. You can Google SLS Dubai online, and you'll see thousands of positive reviews, because it is a simply stunning development and finished product. So, the developer has offered hotel apartments on a fractional basis. First time we've ever seen it in Dubai, officially proved by the Dubai Land Department with this level of return. So it's really, really groundbreaking stuff, innovative, and it gives investors a great opportunity to get a premium, high-end product with a low entry level and that secure fixed return that a lot of people will be excited about. So that's a bit of an overview. So we'll run into the questions now. The first one, are there any charges involved? So let's look at the actual return first. So when we advertise the 7% net return, are there any charges on that side of things? No, there's no service charges, no ground rent, no management fees, no maintenance fees, anything like that at all. You will be contracted for 7% return. It will not go up and down. It will not fluctuate. That will be guaranteed in your sales and purchase agreement for a 10-year period. Now, with regards to purchasing costs, obviously you've got the property value itself to think about, the fraction value. And then you've got the Dubai Land Apartment fee, which is 4% of the purchase price. And then you have an administration fee of 3,000 dirhams per fraction. So they're the only 3 financial implications that you need to consider. So that's the purchase price, the Dubai Land Apartment fee of 4%, and the admin fee of 3,000 dirhams per fraction. Once you own the property within 10-20 days, the return just is continuous, it's fixed, it's guaranteed, and there's no charges to think about. So hopefully that helps there. Next question, is there capital growth / what's the expected appreciation? In other words, what investors are asking is the value of the fraction or value of the property going to increase? Now, there's a couple of things to think about here. Firstly, it works slightly different in comparison to normal residential property. When you look at residential property, you're looking at the price per square foot, the size of the unit, the layout, the views, the position within the development, the on-site amenities, etc. This is important because you're renting it on a long-term basis to tenants, and you want to make sure it's appealing and you're getting a good price. Now, with this type of investment, let's say a commercial hotel investment, ultimately the value of the fraction or the property is linked to the yield that it produces. In other words, the income or the rent it returns. So it's much more focused on the income side of things than the actual physical product itself. So when we're looking at expected capital appreciation, it's a fair statement to say that there would likely be some appreciation, but probably at a slower rate in comparison to traditional residential property. So we do have to consider that. Average property values in Dubai last year for residential apartments averaged just below 17%, so 17 per year. In other words, the average values increased by 17% or nearly 17% across Dubai. Now, if we take obviously a bit off that, a few points off that, because it's a very hot market now. January was the busiest in January in the recorded records. So it is very hot at the moment. So it's not going to stay like that forever. So if we take a bit off there, and then we take a bit off the fact that it's more of a commercial hotel investment, then you can be left with, what you can expect in terms of capital growth. So a few, points per year, I would say is realistic. But you do have to bear in mind this is for investors that are looking for more the income, the cash flow, get a strong rental yield. That's who it's ideal for. If someone comes to me and they say, look, Nick, I want to get a mortgage, I want to see the property value appreciate as much as possible, I don't care about the income, then we would look at other options for, more traditional residential options from the like of Imar, etc. So, yeah, will there be appreciation? Yes, there will be. Will it be aggressive and at the same rate as residential property? No, it won't be. But the income and the fixed return, in my opinion, makes up for that. Just lastly, a very quick point on that. If you buy 4 fractions, i.e. 4 times 25%, it means that you'll be purchasing an entire apartment. When that's the case, with this investment, you can use a mortgage. So that means when you go to sell, the next buyer can use a mortgage as well. In that case, the capital appreciation and the resale market is going to be the same as a normal residential property, and you can still get the fixed return. So if you really do want to get maximum appreciation, but you still value the fixed return, if you buy 4 fractions, you'll get the title deed, and that means it's more of a residential property in terms of the exit. So in terms of the appreciation and the resale market. Any questions on that? If you want to go into a bit more detail, just let me know. But that hopefully covers the capital growth and appreciation side of things. Who are the parties behind it? So there's 2 main companies to think about. The first one is the developer. So the guys that have built and constructed the building and who are providing the fixed return. And the second aspect, the second party to think about is who's running it, who's handling the operations, who's managing it on a day-to-day basis. So if we look at the developer, the overarching parent company is called the Mapper Group, and they've got a construction arm and various other companies as well. But the group or the parent company is called the Mapper Group. They've set up the Dubai subsidiary because obviously you need a local company to be regulated to develop here. And that's called World of Wonders Real Estate Development. So WOW Real Estate Development. Now, Mapper Group as a whole, they were responsible for $1.3 billion of revenue in 2020. This is a huge global company we're talking about. 20,000 employees. They built Istanbul Airport, biggest in the world. So, this is a very, very serious outfit. And, in the due diligence material we provide, you can do your research, have a look into them, etc., etc. And WOW is their subsidiary. So, as I say, they're almost a sub company within Dubai that the contract is with. So, when you're reviewing fixed return investments, one of the things you want to consider is, yes, it's great to have a guarantee, but who is behind the guarantee? Is it a one-man band, small first-time developer, or is it a huge corporate company that's financially sound and liquid for a lot of capital? It's the latter in this case. With regards to the management company, I'll try to keep this as simple as possible, but the face of the hotel, so what everyone is going to know it as, the brand, what's going to be, popular on social media, or already is popular on social media, is called SLS. So everyone knows it as the SLS building, the SLS hotel. Okay, they've got a number of niche, high-end, ultra-luxury hotels across the state. So Los Angeles, LA, Miami, also got a presence in the Bahamas as well. So they are niche, ultra-luxury, very often frequented by celebrities. So that's the kind of caliber of brand that we're talking about. Now, SLS is a brand of the SBE Group, and now Accor Group own about half of the SBE Group. So they're equal in the ownership on that side. Now, Accor Group operate 5,200 hotels worldwide. They are absolutely huge. 260,000 employees. So just over 250,000 employees worldwide. And they operate brands such as Rixos, Fairmont, Movenpick, Ibis, Sofitel, Novotel, huge hotel brands. So the overarching group that's involved in those are the same ones that are involved in running the SLS Dubai. So you can be sure your investment is in very, very safe hands. Okay, next one. Do I have to be in Dubai to make the investment? The answer is no. Probably around 50% of our investors are going to be from overseas, predominantly the Middle East. So Saudi, Lebanon, Kuwait, Qatar, obviously UAE residents themselves. And then we do expect a large amount of interest from Europe as well. So yeah, you don't have to be in the in the UAE. It's all done remotely via email, and your sales and purchase agreement will be sent physically to you in the post. But it's all set up for remote investment. It's all very modern, online payment links, etc., etc. Very swift, very sleek, and very easily done. But remember, it's all legally sound, all through the Dubai Land Department, all robust contracts in place. Next one. Can I stay in the hotel? So the answer is, on a short-term basis, yes. So each investor per fraction will get 7 free days stay per annum. So if you buy multiple fractions, you can obviously add that up. So if you buy 4 fractions, you can get 28 days, nearly a month stay for free per year. So if you want to visit Dubai, then you certainly can do. Another bit I'll mention here is you do get the Accor Diamond membership included, which is you typically have to spend, I think it's around 10,000 euros to obtain that normally on the open market. But each investor per fraction will get that Diamond membership as well. Vast array of benefits with that, but we've included that in our investment pack. So have a look through there. What's the buyback rate? Okay, so just to quickly explain the 2 options that investors can choose from. So number 1 is getting the 7% contractually guaranteed return for 10 years. And then you can sell on the open market at any time, at any price, through any agent. You don't need an NOC, or you don't need permission from the developer. You don't need permission from the other investors. You don't all have to agree to sell, etc. Your fraction is completely independent, and you can do what you want with it. So that's the first option, the 7% guaranteed net return after all costs for 10 years. The second option is a 5% net return, also contractually guaranteed for 10 years. However, at the end of that, you can have the legal contract for a buyback from the developer at the same rate that you purchased for. So 5%, 10 years. At the end of 10 years, the developer will buy it back at the original price that you purchased it for. For me, I'd probably be looking at option 1, just because that 7% is really, for downtown Dubai as a net return, that is really a premium rental yield. And I don't think there's going to be any issues at all with disposing of the fractions, i.e. selling the fractions, just because the return is for such an extended period of time. After year 10, they project about an 8 to 9% net return. And, that's going to be appealing to the next investor because the risk is minimal. It's complete and operational. They'll have a track record of occupancy rates and average daily rates being achieved. So they'll know that the hotel is successful. They'll be able to go online, see all the reviews like you can now and see it's, successful. And the entry level is low, right? So if you buy 4 fractions, you can sell 1 at a time. And that, if you say you sell it for 500,000, that's very, very low for the next investor to buy into. So that's the buyback rate. So the next one, how do I sell the fraction? I kind of answered it there. So you sell it on the open market through an agent. A resale. All they would do is transfer the ownership certificate or the title deed to the next investor. Simple as that. Very, very straightforward. Can I get a visa? So this may be big for a lot of obviously non-residents. And a lot of you will be aware that the government recently introduced the investor visa, where if you invest over 750,000 dirhams, you take your title deed to the Dubai Land Department, or you register it when your project completes, and then you get a investor visa for 3 years, which can be renewed. That's the same case with this. So the exactly the same value has to be achieved. So you have to invest at least 750,000 dirhams. But when you do, you can be eligible for that 3-year investor visa. Next one, can I use a mortgage? Now, we had some news recently that if you buy 4 fractions, i.e. 4 times 25%, and you become the owner of that entire apartment, then you can use a mortgage. Okay. So that works out, I think the minimum entry is just over 1.8 million dirhams. So 460 times 4. In that case, you can use a mortgage. If you're purchasing individual fractions, you can't use a mortgage. It would be a cash or an outright purchase only. So do bear that in mind. And I've quickly run through some frequently asked questions there. I don't want to make this video too long. So I'll leave it there for now. If there is anything outstanding, if you want to book a consultation call with me with regards to discussing the development, if you have any questions, you can send them over via email or WhatsApp. So if you email info@masarcapital.ae, that will come through directly to me and I can respond. If you want to call or if you want to just do it via email, that's fine. It doesn't matter. And I'll give you the necessary information provided. So as I say, guys, just to wrap things up, this is a brand new opportunity to the market released a few weeks ago. There's been already positive press around it from the Hotelier Middle East, Gulf News, etc. It's the SLS brand is becoming very, very popular in the market. Go on Google and type in SLS Dubai. Look on TripAdvisor, look in Booking.com, look at the Google reviews. It's a real life opportunity here, and there's nothing like it in the market. Simply nothing like it in Dubai. 7% fixed net return for that 10-year period, low entry level, great location, 5-star product in what's now the most visited city in the world. So all the investment fundamentals that we look for are here with this product. So yeah, we'll wrap things up there, guys. Any questions, get in touch and I'll be happy to help. And that's Nick at Masar Capital. Thank you very much.